Welcome to TradeTheMBA.com. This is John. This report is for the 10th of April. Well, that was so much fun. You know, it's an interesting thing when the market, for just a brief moment, reveals itself as actually not controlled or free. President Trump made his remarks where he froze tariffs publicly, and look at that reaction. And not surprisingly, I mean, he warned everyone that, not to panic, that the trade was, going to work out. Now, that was quite the shift, though. And I think that the threat from Wall Street was pretty clear to him as things were going, because he talked about the scaredy cats that were causing a problem with his negotiation stance. And, it's tough to do public negotiations. And in this particular case, China made the mistake. And this has always been the case. This was always a geopolitical war, and China was always the main target in this. It was not Russia. In fact, the overtures to Russia, Iran were to separate and isolate China. And that's exactly what they did. And so, not a shock, because finally, for the first time in many decades, recognizing, who your main adversary really is. So, okay, whatever. Now, what does that mean from a market standpoint? Well, you can see it was just magenta moving over white. Pretty straightforward. It actually started earlier in the day. Nice from the fill standpoint, everything taking care of itself and returning just pretty much to the baseline where things were before all the trade stuff started talking. So we were still in a weak phase, and even Trump mentioned it himself that it's going to be towards the later part of the year that things will start to take effect. It's not complicated, people. It really is pretty straightforward how these things work. Uh, it's really weird listening to a lot of the economists talk about these things because they haven't a freaking clue. I don't know where this inflation they were going to get. Nobody's required to go to Walmart and buy the lawn chair made in China that now is double the price. If you want to, go ahead. If you don't, then where's the inflation? It's common sense. But that's okay. In a broader context, it's not bringing in that much money from the tariffs, and so freezing them at the lower rate and then getting individual negotiated deals ultimately will be less expensive overall, bring less money into the treasury, but certainly be help for business. From an NQ standpoint, all the way up to the 50% move right here, and that's clean. The shakeout, though, again, this is where you have to watch, because this becomes a question of trend versus just outlier moment, and we're still not into the positive side of things. And yes, you can get major face ripping rallies within a broader downtrend. Anyone who was around in 2007 8 and got to play with some of those moves, they were quite dramatic, and nonetheless, still was a broader downtrend within it. Treasury is, of course, all over the place because the Fed's still absentee participant in all of this because they don't know what to do. They can't operate in this kind of back and forth of policy on a daily basis. They have to stabilize a broader economy theoretically, which we can debate that one, but that's not the point. They can't be making changes every 2 minutes, where Trump can speak every 2 minutes and change his mind on this, that, and the other. And the market seems to want to follow exactly what he's saying, but all the gloom and doomers got silenced pretty fast. The problem here is, though, the counter side of it, oil, yeah, where you were getting the benefit of the oil decrease, and this actually is a broader, more significant impact for regular individuals than any of the trade talk that's bantied about, because all this fear of the global recession, yada yada, and everything, moving oil prices lower. But as soon as I think that may not be the case, major pop up. Now, of course, with the China still being an issue, I think it'll be trouble for oil to maintain itself at this particular stage, because again, um, as a primary trading partner, they're not going to be shipping a whole lot unless they get things squared away. People are very confused about what to do with the euro. They just don't want to be in the dollar at this particular stage. So pulling their monies back home, as a defense, because they're angry about him wanting to make Canada the 51st state or take over Greenland. And when you look at the realities of the situation, from a geopolitical standpoint, you have to do some of these things. It's just an unusual way to do it, and there's just no question about that. It's very unique. Um, but broader from a strategic standpoint, correct. But the euro continuing to hold on. And, this is a question of where the Fed behaves behind the scenes because without the Fed backing the eurozone, there's just no reason that it would be anywhere near where it is. So it's an artificial push, and it's worked at this particular stage. There hasn't been a flood exit out of it, but the eurozone is pretty darn weak at this particular stage from a gold standpoint. Yeah, they're re-heightened additional fears that people who don't know what to do. It's like, let me just buy gold and set out. Not able to really figure out what to do. Bitcoin and them made some modest returns. I mean, they're still again caught right between these two positive extremes going back from the other year. But again, Magenta's over, so that's a positive sign from that standpoint, and much more improved shakeout. You're -7 right there. That's easily overcome. You've been in this rising gold, so it's been an accumulation period. And this is something that other people don't talk about because even when we're talking about the ES, it was an accumulation at that base stage, even though things were still dipping. We had some modest improvements. Where you don't see any improvement is ETH. Look at the difference. Yeah, not good. That one's not even comparable. And here's how fun it was intraday. So we had our brief down from before. We consolidated NBI white. Ooh, big move, but didn't quite make it to the zero. All right, so it pops up again with magenta. All right, you know that you're going to get a rally back up there to the 50%. But then, NBI white again. So now you're expecting to move to zero. But this is where it becomes a problem because, yeah, like I said, shakeout. Now we're near almost positive on the shakeout. And rising gold. All these things that we discussed the other day as warning signs for that turnaround flip that creates that forced short covering. And then there it is, right here. The magenta makes its move, crosses above, and that's why, guess what? The pink bar turns green, and the buy program, buys. What was that level that it bought at? 65. Yeah. So one trade will be more than what you would make in an entire year, and that's why you want to be in those setups when they happen because that's all it takes, and that's where the volatility is not an enemy because this was one of the few moments in time where you actually had a free market. Everyone had the same information at the same moment. That doesn't happen. And don't think that it does. I mean, everyone thinks, oh, yeah, it's all prices. No, no, no. This was one of those true moments where comments just literally drove things. Now, some people may have been aware that he might make that change, and that may have been why we saw some of the stability. Was there some insider trading with that? Who knows? But from the broadest standpoint of it, wasn't until he spoke that made the move. And yeah, sure, positive extremes. So don't forget that they still exist, but it was pretty clear. Nice and fun. Intraday, yeah, here's where you can see it all took place. Right there, boom, he begins to speak, and voila. That's just a huge range. From an S&P standpoint, it was even bigger on the Dow. It was like, what? Yeah. It reminded me of watching the flash crash, only that was in the reverse direction, and this just kept going because again, when you're short covering, you're going to have to pay anything to get out of those positions, and they're being forced liquidated the faster it goes, and that just fuels it even more. And then you got buy programs that then start to kick in because the others triggered over their levels, and it snowballs, and you can't grab enough shares fast enough. The only problem with that is that the price can rise pretty darn fast and go excessive versus the other way around. When you're short a position, it can only go to zero. And that doesn't happen very often, except for if you're leaving. Here, the post-market European session, they're pretty much weakness because the Europeans are scared because they're just praying that they don't get stuck on the wrong side of the tariff situation. They almost retaliated. They held off. But now you've got China isolated in a box here because they're the ones who look like they're being aggressive to the world because everyone else who agreed to it said, yeah, let's talk. All of a sudden things work out for them. And now they're realizing You better to make a deal with the man in the White House at this particular stage than not. And they're probably all very grateful and happy that they made those early deals, because it looks like the ones that did are going to get the favorable, just as we talked about. This was something that, and they even told them up front exactly how to approach the negotiation. Come in early and you'll get a good deal. Come in late, you're going to pay. And but this has broader geopolitical implications as far as the war, Iran, Yemen, all of the situations, and China's influence, and fair practices that they've exercised. So we'll see how it plays out, but it's going to be interesting. It's fun times. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.